Hello, everyone, and welcome to another edition of the Smart Investor Market Update. I hope you all had a wonderful weekend. What we're going to do is look over what happened last week in the markets, take a technical look at what happened. We're also going to look at a special area of the market, and that's a commodity sector that has not really been doing well over the last couple of weeks. So we're going to take a look at some commodities and what are the main trends for the commodity sector. What we will also do in this episode, we will look at the broader market. So we'll look at the currency market, the commodity markets, and the stock market to see what is happening there. Okay, so last week the market was fairly positive. We saw the S&P 500 climb and tested resistance up at that 22,800 level. I've been speaking about that 2,800 level, and what we did, if I draw a line at the level, you could see that the market closed right below that resistance level. So this area is still remains fairly strong resistance for the S&P 500, even though we had a fairly strong week. What you would want to see if you are bullish stock is the market close above this 2800 level and then challenge the all-time high in S&P 500 at 2878. The market still has some fairly strong headways in front of it. If we look at what happened in the Dow Jones Industrial Average, similar situation, but the market did not challenge the high near that 25,550. And what we're seeing is some divergence in the different averages. We see that the S&P 500, the Dow, and the Nasdaq are performing differently because the Dow did not go up to its resistance area. The S&P 500 did, and if you look at Nasdaq, the Nasdaq was at all-time high for the week. Well, all-time high period. That's what the Nasdaq made last week. So we're seeing the tech-heavy sector making all-time highs, while the Dow is not keeping up, and S&P 500 is moving fairly flatline. So there is some divergence in what's happening in the markets. Now the question is, will the Dow catch up to the Nasdaq? Is the Nasdaq acting as a leader, and will it drive up the Dow, or is the Dow kind of foreseeing that there could be some headwinds in front of us, and it is telling us that you should be cautious? And that is a question that needs to be answered over the next couple of weeks. If you are long stocks, the market is still remains bullish, but just remember, when you have these bullish market conditions, remember to have your exit strategy. Most folks don't make money in the markets because they don't know when to get out of these markets. They don't know when to take profits. And what you need to do is have a point, decide a point where you are going to exit the markets in case we see a strong turnaround in the markets. And we're coming up until late July in August, and sometimes we see market volatility increase in those August month into September, and we could see a topping out action in that time. So just be very aware of the markets at this point in time. Okay, if we take a look at the we looked at S&P 500 already. If we take a look at the European markets, we see where the FTSE last week was fairly bullish. Okay, looking at the FTSE, we see that the FTSE was up on the week also, still below the all-time high. It's kind of in keeping with what's happening with S&P 500 on the FTSE. The German DAX was up slightly on the week. It's still below its all-time high, and it's still below critical resistance in the 13,000 region on the German DAX. Support on the DAX is at 12,000 or 11,800 to be exact, and if we close below 11,800, that would be fairly bearish for the German DAX. So that is a level that you need to pay attention to on the German DAX. We see and it's not good to point out these things until the pattern is complete, but what we could be seeing is the start of a head and shoulders topping out action on the German DAX. Now with the head and shoulders topping out action, the pattern is completed once the market closes below the neckline. So that is just something that you have to keep an eye out on in the German DAX. And essentially, this is what we look for in the markets. We look for things before other people see. We try to look at patterns, we try to look at trends and the prevailing trends in the market and act on them, because that's how you can ultimately make money in these markets. Okay, looking at the commodities sector, this is the Bloomberg Commodity Index, and as you can see, the index was on a high in May, coming up just to 92, and we see that the market has plunged towards support in the 83 region. So the market is at critical support at 83. But looking at the index also, we see that if we bring up a weekly chart of the index, we see that the market was in a triangular consolidation pattern. You can see here, and the market appears to have pierced below that uptrending line. So if we start to see the market close below, it has closed below the uptrending line already, and if it starts to close below this 83 level, what we could see is a further deterioration in the commodity index, and we could see the market go back down to the all-time low just above 70. And the commodity index started to perform poorly once we started to get those tariffs announced, and ever since then we had a lot of the complex collapsing, especially soybeans. If we take a look at the soybean market, we see that soybean oil, we see that soybeans has really taken a tumble. This is a daily chart of soybeans. As you can see, the market has really fallen off a cliff ever since May, where we see a waterfall decline in soybeans. We have had declines also in other commodities. For example, the uptrend in cotton that was suspended, and you can see that the market collapsed in early June. Also the oat market, we had a slight decline in May, June. Natural gas market, we see that the market has declined ever since early June. So we're seeing commodities head or move to the downside. The one commodity that has really been outperforming is the crude oil market, where we see oil, it did have a down move last week. Actually, the market was down some 5% on Wednesday, I believe it was. But as you can see, this market is still in a broad uptrend. A series of higher highs and higher lows still prevails with this crude oil market. So this is in a broader uptrend, and because of this uptrend, the commodity markets, the crude oil does play a heavy factor in the commodity index, and that's why the index doesn't appear to be or isn't as down as it could be, and that's because of the crude oil market still moving to the upside. Looking at the gold market, gold has collapsed ever since April, May. We see a market at critical support at the $1,241 region. And if you take a weekly look at the gold market, because we are coming into a point where gold is seasonally strong, and gold is definitely something you have to keep an eye out on. 'Cause what's happening now is that the market is coming up on some critical areas of support at this $1,240 region. What we want to see is the market, or for the bulls, we want to see the market rebound off of this upsloping trend line. If it can rebound, and we have resistance at the 1,241, if it can rebound above this level and challenge the higher 1,350, if we can break out of this triangle, the triangular consolidation pattern, that would be very bullish for gold, and it could definitely signify a turnaround situation for gold. So this is something we're going to pay attention also to. But remember, the average investor is seeing that gold is moving down, they're not interested in it. But what we want to see is if the market is going to rebound. Now, on the other hand, if we start to see the market close below the triangle uptrend and close below 1200, that could signify a broader move down, and what we could do is even challenge that $1,100 region in gold. So we're still in a consolidation pattern with the gold market. Moving towards the US dollar index, we see that the US dollar was up last week, but again, price action in the US dollar index remains anemic, and currency traders now have been having a pretty troublesome time because the markets are very choppy. Currency markets are choppy across the board, especially the major dollar pairs. They were going to keep an eye on what's happening with the currency markets, and I know a lot of investors are getting chopped up at this point in time. On some of these classes that I am conducting, we have a number of currency traders that are saying that they're having a hard time. Looking at the euro versus the US dollar, again we see the market moving sideways, not trending much. It's a daily chart of the euro. If we take a look at the British pound, a similar situation where the market is moving sideways after a swoop down in April. The Japanese yen, this is a chart of the Japanese yen futures. So this signifies the yen going up, this signifies the yen going down. This is not a forex chart where you have USD JPY. This is a Japanese yen futures chart, so that's why it may look different for some of you who trade the forex market. And the Japanese yen broke to new lows since that was holding the market in May, and the market broke down below that level. So the yen is moving to the downside, and it makes sense because oftentimes when we have a rising stock market, we have the yen moving to the downside. So that is something to keep an eye out on. So that is essentially a general synopsis of what is happening in the market. Now, I did speak about Amazon last week, and what we saw at the end of last week is Amazon again moving to new highs. So this is why market selection is important. So while you have currencies struggling, you have commodities maybe struggling, you have the tech sector in stocks moving up to the upside and moving up nicely. So what it could mean is that resources are allocated to this sector of the market. Because to be a complete investor and a complete trader, I have found it beneficial to look at various markets. I know there are some traders that are just forex traders, or some traders that are just stock traders, but what you may find is that in another year or so, the currency market may be on fire, and what you would want to do is take advantage of that. Or commodities may be on fire, so you may want to take advantage of commodities while stocks are moving sideways. So a lot of the techniques that you use to trade the stock market, you can use to trade other markets. And to be a complete trader, it's best to look at various markets. I'm still conducting our free classes all for the month of July. We're conducting the free class. The coming up to the middle of the month, so you have to get on the schedule because the spots are filling up very quickly. So what you can do is click on the link below this video to schedule your class. These classes are held one-on-one. We are going to look at charts. We look at what is troubling you as a trader, and we are using this class of the view to improve your investing. This is a very unique opportunity. It's not often somebody's going to give you one-on-one attention over the internet with your trading and investing. So if you want that help, it's only available for the next couple of days really. So click on the link below and read the information about the class, and then you can schedule your free class. Thank you very much for listening, and I hope you all have a wonderful and profitable